Welcome to another edition in this series of talks organized on behalf of Spiders, the sole platform for initiating discourses on equitable and resilient society. The talks complement a series of original papers published on the Spiders platform dedicated to outlining the building blocks of post-capitalist political economies and societies not oriented around growth and profit, but rather good lives and a flourishing web of life in times of profound planetary change. Hosting these talks are founder of the Peer-to-Peer Foundation, Michelle Bowens, and myself, Ro Krantz. And today, to help us outline some of these building blocks, we're joined by distinguished guest Dr. Mary Mellor, Emeritus Professor at Northumbria University, author of numerous articles and books on feminism, politics, sustainability, and economics, and for the Spiders platform, author of the paper Public Money for Social Change in the 21st Century. Welcome, Mary.
Thank you.
So to start off, we thought it would be great to hear from you directly a little bit about what got you into these fields, your influences, inspirations that help shape who and where you are today.
Well, my first areas of research were in the social economy, on cooperatives, but I subsequently added to that an interest in feminism, and particularly ecofeminism, and both of them brought me to the relationship between the parallels or the outside to the mainstream economy, the market economy. And so I developed out of the ecofeminism the difference between moneyed economies and the non-paid economy, the free labor of unpaid labor of women, which got me into there. But then later on, I became much more focused on the public economy. And so I was interested in the relationship between the public economy as a bridge to the non-paid economy of domestic labor and to the parallel economies that people were building. I did a particular case study of the British cooperative movement, which is one of the original and big cooperative movement. So basically, I've been on a journey to try and find how we can construct economies that can live with or live without or live around the market economy. And particularly when we got to the post-1970s era and neoliberalism took over, what I call market fundamentalism or handbag economics, then I saw that as the main focus. I was just thinking today that I argue very much for the democratisation of money and see money as a very important instrument. And I thought, how undemocratic was the neoliberal Tina, there is no alternative. I mean, how undemocratic can you get than to tell people there is no alternative? So if I've done anything, I'm looking for alternatives that will really create change. We've got the millions of alternatives that haven't actually triggered change. But I'm trying to think of the best ways to trigger change. So there is an alternative, or many alternatives.
Thank you so much for that introduction, also from directly from you. Yeah. So for our first real question concerning your paper, we thought it would be really great to first focus on the first part, which is the critiques of neoliberal theories of money. Before we look at the more radical alternatives.
Yeah, well, sorry.
If I can say something, because you use the word handbag economics, and I'm not sure that everybody is familiar with it. So at the same time, if you can just briefly introduce that concept.
Yeah, right. Yes, right. Well, the depressing thing about it is how much neoliberal theory around money is absolutely mainstream to economic thinking going back to Adam Smith and wherever, Aristotle even. The idea of there are precious, the money is a precious thing. It has a value of its own, and its ideal is gold coinage, and all this history of money where we're seen as having as money having its own agenda, as it were. It has its own value, its own agenda. Money talks. You've got to have, the politics must be sound money. And when you came from my position, which was about unpaid labor, then you want to know, well, if money is a given and then it has its own logic, why has its logic excluded women's labor, the damage to nature? So that's what I opened up, and I started to go into the ins and outs of neoliberal and mainstream economics, because this thinking is mainstream, about how money is created by the market sector, and the market funds the public sector, and this is where I developed the concept of handbag economics, because I mean we well understand now, and we well appreciated that we treat the state, neoliberal ideology treats the state as if it's just a household. We mustn't pay more than we mustn't spend more than we get in. We mustn't take debt. We must live within our means, tighten our belts, the whole austerity ideology. And I christened this, I think I'm the first one to use it. There might be others elsewhere, but I've predominantly used it. This handbag economics, and had in my mind Mrs. Thatcher's handbag, with her Tina, because she's the architect of Tina. There is no alternative. So I christened this handbag economics that treats the state as the public sector as a household, and so it's that ideology I'm getting at, because we now there's no question of the state being a householder with the current pandemic. I mean, the state is the only game in town at the moment. It shows which is by far the strongest economy, whether it's a public economy or the private economy. So I'm trying to upend the whole thesis of neoliberalism.
Maybe I'd like to interject something. Some people are kind of saying, I don't know if they're joking or not, but they're kind of saying, well, actually MMT is already applied, but it's only applied for the rich, with a trickle down. But actually, it seems like they actually have pragmatically accepted the underlying idea of MMT by, quantitative easing and on a massive scale, twice, first in 2007 and now in with the pandemic. It's just that they're directing it in the wrong direction.
Yeah. If you read, I see what you're getting at. The saving of the jobs and the massive amounts of public expenditure. They're saving the population. I thought you meant MMT people, but you're meaning the current economic system. Got you. Yes. What they're in a way they're directing it where it needs to go, because they are job guaranteeing with the furloughs that they're, and the backing up and the backing of the private sector, while not diminishing in any way the public sector. I mean, before it's always been, neoliberalism is always presented as a battle between, if you put it in the public, it's a zero-sum game. If there's more public spending, that means there's less for the market. If there's less if you want more for the market, you must cut public spending. And this is the zero-sum game, which is this ideology of a limited money system, which goes right back to gold and silver and scarce commodities. And
I was wondering whether, without really saying it, the powers that be are now actually kind of accepting the premises of MMT.
Yes.
Through their action, not their theory, but actually what they're doing. Seems like they now also believe that they can create money when needed.
Well, they've admitted this from when the Bank of England made the statements in 2014, and the European Central Bank made the emissions, the IMF made the emissions. Bernard Bernanke admitted he was just pressing keystrokes. So what the MMT and plenty of other people have been saying is that the way the money can be created. There are magic money trees. The state can create money, and it constantly does create money, whether it's directed to the market for quantitative easing or whether it's by direct public expenditure. And that the idea that all the ideology of neoliberalism, that all wealth came from the market and money is created and circulated by the market, is just fallacious. And they've had to. What I've been saying and what MMT have been saying is that we're not making utopian demands about how the money system should work. What we're trying to say is that this is how the money system works. States are not households. States do not have to wait on the market to create the wealth for them to spend. You can have public wealth, you can have a public economy, you have all money is public money. That's my case. Because in the end, as a people, we are responsible for the integrity of our money system and the fact that we all agree to abide by it. Because that's all money is. It's a system we agree to acknowledge each other's contributions. I know there's great inequalities in market systems. I mean, I'm not accepting that that is how it should be. But the money system now, particularly the fiat money system that we've got, with no reserves, gold, or any of these ideological assumptions, basically it is just an agreement between us all to honor each other's needs and each other's work. So you know, it is a social system that in the end has to be publicly administered, otherwise the system grows or dies, you know. So that's my, and it's being, it cannot be denied anymore. It wasn't being denied by the central banks anyway, but it can't be denied by the public now. They're still, although they're still talking, the thing that annoys me most about what they're doing now is they're talking about borrowing this money. They never talk about state expenditure. It's always talk about state borrowing. And this is just a smokescreen, because most of that debt is held by the central bank, which is part of the state. Or I mean, it argues it's independent, but that's another neoliberal ideological position. So the state can create money. It does create money. It always did create money, and it was always responsible in the end through its space system, through the integrity of the money system. So does that answer your question? No, not quite. You're
well,
muted.
what I was trying to what I was trying to say is that the way they spend it, it's still trickled down, right? It's still the idea that the money that's created is going to the banks, the financial system,
Yeah.
and hopefully that will maintain the economy flowing, and then it will trickle down to the people who need it. But there's no that money is not used for social policy or for equity or for any, you know, of the goals that you also have. So it's kind of a perversion of what you're proposing. That's what I'm trying to get at. Is that,
well, it was with quantitative easing after the financial crisis, and that was pumped into the banks and expected the banks to, you know, create more loans, etc., which of course hasn't worked out. It's just gone into inflating asset prices and stock markets and housing and all the rest of it. So it's gone. It was definitely challenging nothing from the financial crisis, because the speculation, the gambling is back where it started, if not worse. I mean, that figure that Oxfam brought out, that the money extra gained by the top 10 earners in the world could have vaccinated the whole global population. I mean, those are things that are absolutely horrible. But what has been the space we've got, the opening in the current crisis, is that they can't do that anymore. Going through the banks is a dead duck. You've got to give the money directly to the private sector to sustain it, keep all the pubs in, you know, keep the staff on furloughed, etc. But also you can't cancel any of the public sector, particularly the health service. So it shows that really, in the end, when it comes down to the bottom line is feeding and saving people's lives. And there's no question of finessing that through the market. I know the market has been brought in and has contracted and getting all the packages of I've lost words. PPE, the personal protective equipment. That's right. PPE. there's been a lot of corruption in that and a lot of giving it to their mates. But the principle of the main expenditure has to go into the public sector, particularly the health service, I think breaks that whole convention that you've got to go via the market system. You've got to go via the public system and the market. Even now, I think with all the privatizations we've had in Britain, it's only about 10% have been touched by the market sector. The 90% of public expenditure is still public expenditure. Okay. And they're now, so I think the idea of the filtering through the public, through the private sector, through market wealth creation, I think that's a goner. And the other thing that goes against that is all these high-tech companies and speculators soaking up all the money. That doesn't go very well with the public either. So so we've had the two things happening: the demonstration of the utter importance of the public sector, and the gross inequalities of the private sector. If we can't make a case for social change in these circumstances, then we might as well give up.
So that if you don't mind, that brings me to another question. So is there any political maturation as well? Like, have you been talking to, you know, political movements, political parties that are starting to think that, yes, you know, this should be part of a political solution? You know, I know, for example, in the US, MMT was very close to Sanders and people like that. And of course, Labour lost, and I suppose that's the side that you would have worked with. But is there any? Do you see any progress politically in terms of, you know, making these ideas actually as a basis of a very active social and ecological policy?
I think we've got we've laid the groundwork for it over these last decades, with particularly the critique of neoliberalism. I think neoliberalism is things like the concept of austerity. This has been, I think they've lost their credibility. Mm-hmm. And what for a long time, the ideas of MMT and other monetary critical theorists is that it hasn't broken through into the mainstream left or the centre left. They've not taken on board, probably because it's complex. I think money is one of the most difficult things to understand because it's real and not real. And I think it is such a strange sort of hybrid phenomenon that it's very, very hard for people to grasp. And particularly when you've hammered in for all this handbag economics for the last 30, 40 years, you know, it seems to be common sense, doesn't it? You can only pay as much as you've got. And until you say you've got plenty, and as soon as you say you've got plenty, then say plenty of money, there's no shortage of money. Immediately you get Zimbabwe, Venezuela, right, Weimar Republic. Now, what's interesting about that is it's always the same ones quoted over and over again. The fact that the majority of countries in the world live with modest levels of inflation, or even quite high levels of inflation, and still cope, like and lots of creation of money supply, like Japan, without inflationary responses. So we've got the groundwork, we've got the arguments. It's been accepted by things like central banks. It's because I've noticed in the last few months 2 editorials in The Guardian, which is the kind of public sector newspaper in Britain, promoting MMT type thinking. So if opinion leaders like The Guardian are accepting it, then we won't shift the ideologues for the market system. I mean, we were not looking at them, but the middle range, the public sector economists, the welfare economists, if these take on board this fundamental analysis that the new monetary thinking has done, then I think that it's an open door. Mm-hmm. So it's that barrier of people who still are frightened of this threat of Weimar Republic, you know. Right. and they can be. You can imagine a Labour Party. Well, in fact, the Labour Party manifesto in the 2019 election, when Corbyn did his "we'll nationalise everything," and he didn't say that. Sorry, scrub that. The widespread public expenditure is what I mean. Widespread public expenditure. He was poo-pooed then, and yet the government's having to do it now.
Yeah.
The very things that so we haven't convinced the centre left, actually, to be honest, we haven't convinced the hard left either. But I mean, I don't think they're the source of social change. It's the centre left you want to get at.
Yeah.
And the centre left has not yet understood what we're saying, but I think we're getting there.
Yeah. So have you followed the news that there was a petition? Maybe you signed it. I don't know. With Thomas Piketty to abolish the debt of the public sector at the European level. Have you followed that news?
No, I haven't actually, but I mean, I have been promoting the idea that any debt owed to central banks should be cancelled.
Well, I think there's a petition on that very subject that's been signed by, at least in France, by quite a few famous progressive economists, and there's already been reactions like the head of the IMF saying it's illegal to do so. So there's been a pushback, and I've watched the French televisions pretty much, taking the very conservative point of view that it's ridiculous, that it can't happen, that money has to be paid back. So certainly in terms of like public opinion mechanisms, it's not one yet. This kind of idea.
No. Well, I mean, something you said there that the French says it's illegal to do it,
yes.
Which shows how it's not in the nature of money that you can't do it, because if money dictated that we couldn't pay off public debt, for instance, then you wouldn't have to have a law about it.
Right.
People make laws. The case for the central bank not funding the state. This is the law. It's an ideology. It's an ideologically imposed law of neoliberalism, and sort of mistaken economic thinking. There's nothing in money that says you can't cancel public debt this nonsense of the state borrowing from the commercial money market. So the state borrows the money. At the same time, the central banks create new money to buy that debt back again. What's all that about? It's just nonsense. It's just giving a little bit of the icing on the cake to the private sector.
Right. I mean, it's actually subsidizing the private sector, isn't it?
Yes, subsidizing the private sector.
Yeah.
I mean, how politicians don't stand up and say this is nonsense. So I'm not underestimating how far we have to go, right. But we do have a wave of thinking that is there, ready to be absorbed once people open their minds to it. Yeah. You see, I mean, I often draw the point about Hayek. Hayek in the 40s and 50s was making the points that Reagan and Thatcher didn't pick up until the 80s. And the right wing, the neoliberal arguments were being built by a phalanx of neoliberal thinkers and then broke through in 20 or 30 years. Well, we've been building that modern monetary thinking for 20 or 30 or 40 years, and it obviously goes back before that, but the current wave has been going on for about, since the 1990s, say, particularly. And we've built up the head of steam in the same way the neoliberals built it up before 1979 or the late 1970s. And I think, movements take time. You've got to build the groundwork. Neoliberalism did that brilliantly, and I think we've got to do it brilliantly as well for social economics.
Right. So just playing a bit the advocate of the devil. So let's assume that this is an accepted principle in progressive governments. so how do you manage the limits of that money creation? So do you look at inflation, or what's the um, what's kind of the outer limits of using these principles, creating money for human need? Um,
Yeah.
geez,
Well, where MMT is perfectly correct is that taxation should be seen as a monetary instrument, not a fiscal instrument. It's a means of managing the money supply, not making decisions about how and what you spend the money on. That's the fiscal questions can be taken by is through political debate. How much money do we want to give to the not even how much money do we want to give to the public sector, but how much money does the public sector need? How much does the environment need? How much does the planet need to be spent to save from us from extinction?
right.
The climate change and all the
Yeah.
rest of it. So those are the fiscal questions about what do we want to spend money on, and the quid pro quo of that, if you decide that you need to spend 50-60% of your GDP or a GDP equivalent. I mean, GDP is not a very useful concept, but of the outgoings of your whole economy, you want your public sector is going to be equivalent to 50-60%, which is more the Scandinavian model. Then the quid pro quo of that is that to balance this system monetarily, you're going to have to retrieve quite a lot of that money, and you're better off putting money widely into the economy and then retrieving it from people. You say, well, why pay when we first launched income tax, people used to worry about, well, you're paying a public servant. Why do you give the money to them and they have to straight away give it back to you by paying their income tax? That's silly, but it's not silly because there's the private sector as well and they have to pay their share. So you can't dock the money out of the public sector. You've got to spread the burden across the public and the private economies, and also between doctors and care workers and lecturers and soldiers. You can't you can't have an individual tax collection from every individual person. You've got to deal with it across the board. So you decide politically, you decide how big a public economy you want. You then create and spend the money that you need through the public budgets. But the quid pro quo is you've got to then tell the economy what level you're going to take back across the board. So you don't pay higher taxes in order to create more public expenditure. You create more public expenditure, then have to ask for higher taxes. And therefore, the difference, it's always been presented by neoliberal and conventional economics that the government's always got its hand in the taxpayer's pocket. The money would be better off in your pocket. You're being robbed by the state. No, you're not. You're just having to give back the proportion that stops you getting inflation. So it's the inflationary control comes in the taxation system. And that's what MMT says. And I think that's the correct way to look at it. How to manage it.
Rock, I'm just continuing, but if you have questions, please. So I want to discuss two things with you, which is, so we see two things happening now, which is, on the one hand, like a fairly substantial growth of local currencies, which seem to be designed to protect the local flows of money, so that the local people don't spend their money in institutions that then export the money to elsewhere. Like generally speaking, I was in Ecuador in 2014, and poor people in the province go put their savings in the bank, but the banks always flush out the money to Quito, and then it gets used in ways that don't benefit the local people. So the design of local currencies is often designed to kind of protect the local flows. That's one thing. And then the other thing we see today is an explosion of virtual currencies, especially now in 2021. It's really seems like a pivot year in terms of, you know, the amount of virtual currencies, the value of the virtual currencies. And so what I see is a bit of a contradiction between a, you know, territorial world that's based on nation states and territories, but through social media, an increasing amount of human life is being organized in networks that are not directly linked to the territory, and these people are kind of, you know, sometimes an exodus of their territory and creating international streams of currency that, you know, have a parallel circuit. And so I was thinking, how do you see this? How is the relationship between the nation state money, the kind of relocalization which is happening in many fields, also, you know, in supply chains nowadays, and then this kind of like virtual community, remote work, digital nomads, you know, blockchain, all these things that are happening at the same time. So how is this going to, how do you say this fitting together or not?
Yes. My interest in social economy is that it's another hybrid, isn't it, between the private sector and the public social sector, because it is effectively it's not a public system. You don't pool your money and then buy, you know, create your local health service or your local education system or whatever. It's a way of trading locally, like let schemes are trading schemes. So therefore, it is a socially constructed market, isn't it? But not a for-profit market. And I think there are limits to that model, because I don't think it can very easily scale up the social economies. They're by definition, the words local, parallel, complementary implies that you've got another economy that they're alongside. And I studied my doctoral, my first publication book was on the British cooperative movement. That was massive. It fed half the working class of the UK, and for 150 years, but it couldn't stand up against the American supermarkets, effectively, that came in, the American style supermarkets. So it was as big as you could get, and but it also fell apart because the model of social insurance, where you join in mutuals to save for each other, building societies, that came up against the public economy of the national insurance and the national sector. So it fell apart in the 1950s as the welfare economy built and the more rampant market economy built, and this massive big British cooperative movement fell, the stretch between the two ends. So that's why I got onto public economy, because this isn't to say I don't value social economy and all the experiments and all the connections, but I think in the end it has to decide whether it's market or public, and to holding this hybrid position it can be quite tricky. When it comes to the computer economy, the cryptocurrencies, I don't have much time for these at all. I mean, at the moment, we've got a terrific Ponzi flood in the, it's almost tulip mania, isn't it? The Bitcoin at the moment, with the Tesla guy coming in and just bigging up the market and put, that's, it's as near corruption as you can get. You big up the market and you invest 150 billion in it. Yeah. But my analysis of Bitcoin and these things is they will fall apart between the market and being public economies or national currencies or private currencies. I don't think they're going to survive any better, because my argument about the nature of money is the money system must be valueless in itself. The money you use cannot have its own value. Otherwise, it cannot measure other value, because if it has its own value, you have to say, well, what's the economy? What's the currency worth? What's a Bitcoin worth? If you want to use it as money, I want to buy a house with Bitcoin. Well, what's a Bitcoin worth today? Because to know how much Bitcoin I need to buy my house, I need to know whether it's 40,000 of Bitcoin or 10,000 or 5,000 or 3,000. And if you start asking those questions about a currency, then you have to say, well, how do you measure how much a Bitcoin is worth? And you put it up against another economy like the dollar or the pound or the yen or the euro. But if you then start saying, well, what's a euro worth? Then you have to say, well, you have to put that in terms of dollars, yen or pounds or whatever. If you have to ask, what is the money worth? It's not money anymore, because it needs another money to give it its worth. So the currencies that work are the currencies that, in the end, the value is nominal. Is this thing worth $5 or $10? That says nothing about what a dollar is worth. That is worth half. That's a $5. That's a $10. That's and money has to be that nominal, that having no value in itself, to be effective as money system. So I see all these cryptocurrencies at the moment as largely Ponzi schemes. There's nothing there, absolutely nothing there, bar a computer code. And so to me, they're a nonsense, a complete nonsense. They're going to be no good as money, and in the end, they're no good as investment.
Thank you so much. I think that's a pretty good segue also in terms of your focus on sufficiency and the concept, model, or indicator of gross domestic provisioning. Maybe you could say a little bit about that model.
Yeah. I need to go back to the theory of money a little bit in order to say this.
Yeah.
The idea is that there is credit money or bank money, which is money that we borrow from the banks to fund the private spending and the private sector. And then there is a real money, which is often seen as, strangely enough, as public money, because the state is seen as being the source of real money, notes, coins, etc. I think this distinction falls down because money in the banking system, the non-tangible money, is money. So all the money, to me, all the pound currency it's all, wherever it is in the system, it's all the currency. It's the pound. What is important is, how does this enter the economy? Does it enter the economy by being spent into the economy, as with the public sector, or is it being borrowed into the economy, which is the private? So it's not the money itself that is different; it's the way it's accessed. And therefore, as soon as you put a debt-based economy, where you access your money via, this is new money. This isn't recirculated money. This is new money. If you get all your new money through the banking system, this has ecological, social, and political, economic consequences. Economic, that you can only borrow to a certain level before the people can take no more debt, or the banks will give no more debt. And most of the quantitative easing money is now stuck in the banks. It's not going anywhere. It's not going there. So economically, it doesn't work. Socially, it doesn't work, because if you're poor, you can't get any money from the banking system. Only if you're creditworthy can you get money from the banking system. It's ecologically unsound because it drives the money system, drives the economy, the need to pay the money back and to make a profit, etc. So you can't make ecological choices. That just becomes another cost. So therefore, politically, that causes problems, because the system doesn't satisfy anybody. So it seems to me that we need to get away from debt-based economics to just the social allocation through democratic choices. And to me, and you've also got to bridge the gap between paid and unpaid work. So you've still got the problem of the externalization of the costs of the life cycle of the human being, bringing birth, health, death, old age, sickness. You've got to cover those. You've got to cover the damage to nature, the need to sustain and repopulate nature. So to me, the way you make sure that that becomes important rather than the driving of money, profit, or bank repayment is by bringing people in to make the decisions themselves as close to the human life as possible, as close to the individual in their family, in their home, in their community, in their business, in their employment. And my hope is that the more you democratize the allocation of money, the more people will bring forward their most basic needs. I need somewhere to, I need shelter, I need food, I need clothing, I need intellectual development. This is what, so the link between sufficiency provisioning is that we get away from economy, which has been ideologically taken over by market fundamentalism, by market ideology, and we broaden the concept of economy. So I've used the word provisioning rather than economy, because it's not about the value of money and value for money. It's about need, and provisioning is about need. But the mainstream economics starts from the idea that needs are unlimited, and wants as well as needs, and the wants and needs together are unlimited, and we've got everything. And ironically, it's a model of scarcity, but it's a scarcity about money. It's not a scarcity about resources. It's a scarcity about money, which isn't the thing that's scarce. Resources are scarce, money isn't. Lost my thread again. Just a second, I'll get back to it. Yes. So that brings us to the principle of sufficiency, because it's not a case of things are scarce, resources are scarce, and therefore it's important to establish a concept in terms of the allocation of value and money in society. Is that it should be that you should have sufficiency for everyone, but not enough for all, but not. And you say, well, how do you measure what's enough? Well, what's enough is difficult to measure, but we know what too much is, and we know what too little is. And if you've not got people suffering, and if you've not got people who are accumulating huge amounts of unequal amounts of wealth and of consumption, then it's sufficiency provisioning enough. To me, is what the model we should be going for. So that's how I see the democratization of money as being the route to decisions about sufficiency provisioning. And provisioning covers what the market delivers, what the public sector delivers, what the social economy delivers, and what the household delivers. So it's the model that runs them all together.
Maybe I have one more question, but so there's different studies that show that, if companies were to have to pay their externalities, they wouldn't make any profit, actually. There's one study in France that said that none of the top 40 companies in the stock market would be profitable if they had to pay for the ecological damage. So how do we do that? We need massive, investment in regenerative, investments for restoring natural resources, biodiversity, climate change. So how do we do that? What happens to the private economy in this kind of scenario?
Well, I think the private economy is very much dependent on there being a public economy anyway. So I think the worry about the private sector profit, which is what we're really talking about, it assumes that we need the private sector to be profitable for us to have any public economy or pay for nature or anything. But just a second. I've got to think again. Bloody medication. Can you just remind me what I was saying there? Where were you talking? A question you asked me again. Just remind me again.
So the assumption, you said the assumption is that we need a private economy to fund. Yeah.
Yeah. The catch-22 is that you get the money from under the handbag economics. You get the money for public expenditure and externalities and nature and things from the profits made by the private sector. The private sector says, well, in order for us to make a lot of profit, you mustn't make us pay any, too many public or environmental costs. Then we can create more money. But the trouble is you can't extract them from the private sector because they will always say, well, we need low tariffs on us to create the wealth for you. But so the notion that we need profitable businesses, in a sense, I think this isn't to say we should make everything part of a nationalized economy or I think the idea of we've got to get to a form of market which provides initiative, provides people with the enthusiasm to do things, but isn't profit based. That they should be content to cover their costs. The idea that you've got the skimmed off profits, I think the whole notion of stock holding and stock markets, and particularly speculation. I know that speculation we've become a speculative economy, haven't we? We're not even worried about profits now in the productive sector. So the bleatings of the private sector about it needs its profits, I think we should be moving as many stuff in the private sector into the social sector. So you retain the elements of creativity, entrepreneurialism, etc. And you don't have to have state planning, because so that you get the flexibility of people's initiatives and ideas and proposals. And we should close down the speculative lot. And if you want to invest in social enterprises or private enterprises, you should assume you hold those investments for a period of time, like 6 months at least, which will stop all the speculation. So it seems to me that we don't need to listen to the bleating of the present structure of the private sector. I think we put the people first, we put people's needs first, we put the environment first. We profit, if it's going to be profit at all, comes well down the line. And we shouldn't really anyway be accessing new money through bank loans and banking system. There should be far more awareness that private entrepreneurial work, we're back to the Mariana Mazzucato here, relies on public investment and public initiative and public creativity. So I think the specialness of the market and the entrepreneur just has to be denied. We need the entrepreneurial, what we want is a responsible private sector with a well-funded and comprehensive public sector and plenty of space for social initiatives that sit between the two models.
Yeah. Thank you very much. I suppose we're closing in on the hour, but I had one last question. Maybe Michelle, you'll have another, but I understand that the UK is also the locus of some thinking along the lines of universal basic services, also connected to the ecological dimension and participatory approaches to designing services based on the cooperative model. I don't know if you've been following any of the work, or if the kind of the concept of universal basic services would resonate with what you're implying.
I think it's describing more or less what I'm saying, isn't it, really? At least it's one main aspect of it. That comes up against universal basic income, which is not the same as universal basic services. I think universal basic services should come first, rather than a basic income, if you've got a choice. So, if I know that the two are now kind of rubbing along beside each other and different sides of the same. So I suppose I lean to the universal basic services as the main model, because I think the spreading of the income, the giving of a basic income to everybody it doesn't seem to make as much use of the resources. But that doesn't mean to say that I certainly think anybody who's falling below a basic income level should be given a basic income. So we should decide what level of basic income is, and if anybody falls below that, they should have it as a right. But the idea of a basic income system that is universal, I think, is probably not the best use of the pooling of human resources. So does that make sense?
Yeah, thank you. Michelle, did you have any follow-up?
No, I'm satisfied. It was a very interesting conversation, and yeah,
I think
I'm good.
we covered a lot, yeah, and we think it will complement your article very nicely.
Well, hopefully. I'm sorry to have coughed and spluttered a bit through it all.
Oh, no troubles at all. Thank you so much, Mary, for joining us today.
Well, thank you to the Spiders initiative for bringing together all this material and giving us opportunity to voice all these ideas. And I hope all goes well. I look forward to hearing great things.
Yeah, thank you so much, Mary.
No problem.
Thanks for your lifelong engagement on these lines.
Oh, well, yeah, well, I don't know how much longer I've got of my life to do it, but I'll keep going as much as I can. There's a big conference in Berlin in October on central banks, which are trying to pick up this radicalism of central banks. So hopefully things will happen.
All right.
Excellent.